Sunday, May 12th, 3:28 p.m. New York time. Welcome to Winning Wall Street's Money. If you haven't yet, subscribe to YouTube. It's free. Want to get notifications when the next video is released, hit the bell. If you want to get access to the video the same day and a lot more content, I have a Patreon page. The link's below. And if you like my content and want to support it one time, well, you can give a donation on my PayPal Venmo link below in the description. This week was amazing of what happened in the markets. U.S. Treasury Department reported increase in revenue. So the federal government has more tax revenue. That's positive due to more spending by the consumer. That's positive. The choices are, with that more tax revenue, they could save it. Not likely. They could spend it on new items. Maybe. Or they could pay down the deficit. But that's positive sign. What happened? Yep, and that's released from the U.S. Treasury Department. Well, let's go look at yields. Looking at a 5-year chart, each candle of the week, and a 30-year yield. Yields trade inverse. Yep, yields, interest rates go up, but bonds and notes go down. Federal Reserve, aka the U.S. Central Bank, is a government agency that's independent from legislative, executive, and judicial branches. Thank goodness. They are accountable. They go to Congress on a regular time frame. They also have a policy on what they must be doing to maintain. It's very transparent, much more now than it was 30 years ago. Currently, the Federal Reserve have left interest rates on pause. That simply means they didn't raise them or lower them. They left them on pause. The yields in the financial markets trade based on sentiment. But the traders are thinking, believing, understanding. So a 30-year, look at that. Here's the high of last year, this yellow horizontal line. Here's the low of this year, this yellow horizontal line. We're still inside the range. Last year, the high and low, currently trending down. Yep, I've been bearish yields and trading the inverse, bullish, the TLT. Been sharing that so many times. Yeah, short times I've been taking it the inverse, some of my trades. The 10-year yield, same thing. We're trending down. The 5-year trending down. And the 2-year trending down. Nice. Yep. So now that shows the sentiment. They are thinking interest rates may get lowered. Well, let me tell you something. Those talking heads are nonsense. And the economy is really bad shape. One of the tools the Federal Reserve has is to raise and lower interest rates. So, past several years, they were raising interest rates to help fend off inflation. We're not at those bad levels anymore. Still problems, but not the same bad levels. And we're not at such extreme levels where they need to cut rates so low. Yep. So we could go in this range of pause for a long time. Understand, when the U.S. raises the interest rates, the Federal Reserve, aka central bank, raises the interest rates, we pay higher interest on a deficit. That alone does not convince Congress to reduce spending. When the Federal Reserve lowered the interest rates, that alone has not encouraged Congress to increase spending. Yeah, they have two different missions. You think more the wiser, they would act like an adult and do what a lot of us might do. Well, you refinance your mortgages, your auto loans. If there are lower interest rates, don't just keep spending more money. Well, let's go look at the markets now. Really amazing what happened this past week. First, we'll look at the equity indexes. 5-year chart, self-explanatory, S&P 500. Weekly, look at that. Green for the week, higher high, higher low, broke above this consolidation, closed above it. Very nice. Took out that impulse move down. With that, as I've been saying, we're looking for that trade, and it happened. That prior week here, you see this yellow inside candle, broke above it. I said trade bullish, break above it. And the momentum's going up. Very nice. So one would expect we're going to have a nice extension. I also mentioned, look, I expect this to be higher at the end of the year than where we have been. Let's do a Fibonacci. Fibonacci is a tool. I think too many people use it wrongly. There we go. I took it from the bottom to the top. We did a deep retracement. We broke below the 0.382 here. They closed below it. We did a midpoint test, but we never did below 0.618. We never tested 0.168. So what that means is, because we tested 0.382, 0.382, a little bit below it, high probability we're going to test this swing high, break above it, and have a trend that may go from like this distance to that distance. That's a huge move to the upside. Yep. Nice. And we have certain talking heads in the United States, in the media, politicians that would say everything's terrible. They would discourage you from investing. Don't pay attention. But be situation aware of what they're saying. Like the NASDAQ 100, same thing. Nice. Small trading range. Look at that. Small trading range for the week. First, you can see, again, small candle here on the S&P 500. Let's go to the Dow. Yep, Dow, same thing, breaking out nice. The Dow transports right here, breaking out. Dow utilities up strong, new high for the year. No surprise. Big demand for utilities. Making a lot. Yeah, again, we know they pay dividends. They pay high dividends. But again, all the markets are up. Wow. And the Russell 2000, yeah, they're up too. One is all the indexes are reflecting bullish. They're all trending up bullish. They're strong. Again, I showed you who the better ones are. Now let's go look at the sectors to really deeper look involved and who the better leadership is. Gonna load this up just a minute. First, we'll look at technology, XOK, stock ETF. Look at that, up strong, just like the NASDAQ. Nice. Healthcare. That we broke above and closed above that big impulse move down. Nice. Where do you think it's gravitating to? Probably up here. Nice. Yeah, the financials. Right up there. Nice. Rope would test that impulse move down. So watch that. Caution. We got the high of the year right there. And big bullish candle. Let's see if we're going to have that continued momentum. And consumer discretionary. Huge consolidation over here, but broke above right there. So obviously there's a big value over there. Because impulse moved down. That price, some of those value, because you can see there's a consolidation there, inside candle for a week. We'll see how this plays out because the momentum didn't continue going up. Nope, tiny candle, inside candle, small trading range. That's suspicious. Yep, that's not leadership. Communication services up strong. Industrial, nice breakout. Wow, nice. So you see there are many of them very close to the highs of the year. Consumer staples, new high for the year. Outstanding. very close to the high of 2023. Some of these we wouldn't expect that. Well, it'd be the end. Well, big sector rotation too. Energy, no surprise. Yeah, just had such a huge extension. Has to do some kind of retracement soon. And getting value. This key area is value. So, what do we have? An inside candle here. Big wicks on the top. Watch that area for retracement. I mean, trend reversal. Utilities, new high for the year. Outstanding. We already saw the stock index. Dow Utilities was the up strong. And now we see again the stock ETF taking out all these impulse move up. Wow, strong. Swing high. Very close to highs of last year. Big turnaround. And real estate right there. Took that impulse move up. I mean, impulse move down, out. Continue. Materials. Broke above that midpoint, closed above it. So strong. And we'll look at the Magnificent Seven. About alphabetical order. Oops. I'm on the daily. I want to be on the weekly. There we are. Apple, inside candle for the week. Can you believe that? Everything else trending, or most things trending, and Apple, small little trading range for the week. Yeah. Small little candle. Suspicious. Amazon, new high for the year. Outstanding. Outstanding. I've mentioned that so many times. Be buying on the dip. Strong like a bull. Almost like a bearish pin bar up there. That's suspicious. Google, aka company Alphabet. Yeah, look at that. Meta, up strong. Broke above that inside candle. Microsoft, small trading range. Tested that midpoint. Okay. Looking at all this, I could come to some conclusions. This week, because these small moves, we have a lot of money sitting in the sideline. Look for a retracement, buy the dip, the winners. Be caution, because we might have some gap ups this week for people that missed buying last week. And the gap up doesn't continue to go up strong. You have that divergency setting up for another dip. This, yeah. Impulse move down, retracement, little candle there. So obviously some people were taking profits Friday. They didn't want to hold it for the weekend. Tesla, no surprise. Such a pump and dump. Lower, took out the gap, filled the gap. Yep. Snow, not much interest going down there. And Netflix for you fans. Broke above that midpoint, closed above it. First, Disney. What do you think's Disney doing? Yeah. Look at Disney. Garbage. Wow. Very disappointed. Thank you as always for spending just a little bit of time with me. That's it for the video. Thanks for watching.